Right then guys, welcome back to the channel. So today's video is going to be for those of you who want to be real traders, and in order to do that you obviously can't ignore the realities of trading. So in this video I'm going to be focusing on some very important lessons I've learned recently that all of you will have to go through if you want to trade full-time and professionally and actually make a living out of trading. Nothing to do with what we see on social media and all the nonsense about prop firms getting lucky payouts, because most people, to be honest, are just chasing dopamine. They want to get that 5k FTMO certificate just so they can put it on their story and just feel good about it. None of these things are actually going to help you trade full-time and live off of trading. So there's two very different sides to the industry right now, and unfortunately the nonsense side is a lot more popular. So today I'm going to be focusing on some very important lessons that I've learned recently. Now this is due to a losing streak that I went through, which is something that you will obviously have to go through as a trader. Let's not beat around the bush, let's not pretend and avoid the fact everyone will have losing streaks. The other reality of trading is that every year most of the profit you make will actually all be made in one or two of the quarters, and the other two tend to make a bit less profit. This won't be the same every year, but as a rule of thumb, most professional and profitable traders, that is how their trading actually goes. So for these other parts of the year, when the markets are slower, or if you're experiencing a losing streak, how are you going to handle this? How are you going to deal with this as someone that needs to make a living and a full-time income off of their trading? So I'm going to jump into that in this video. Make sure to stick around to the end so you have a full understanding, because all of this will come together. So the first point is, and your trading system has to have a clear definition between high quality trades and low quality trades. So if I was to ask you that right now, if you can't instantly and clearly define what that is, then you're going to have to go over your system and actually find that out, because it's very important, especially when you're on a losing streak. On a losing streak, right, you don't want to be taking low quality positions. Of course, that's a no-brainer. If you're down percent, the best way to come back to break even is to have the highest strike rate possible. Losing more is just going to make that obviously more difficult. You might have to start lowering your risk even further, which is then going to make it take longer. So low quality positions you definitely want to avoid on a losing streak. For me, in my system, here's an example of a clear A+ setup. I know most of you watching this probably trade the strategy. Nice liquidity right there, gap in front of the zone, very clear demand. Where do we reach in the markets? Well, we came up here, we didn't react from a supply, so we came from clear space. There's still clear targets at least up to this green candle. Direct movement from the high to the zone, that's a very important one. And when you get this type of trade, very clear liquidity, very clear direction, taking out highs, obvious untapped demand, very nice reaction, A+ trade. This is a very high quality position. There will be no doubt in my mind, even on a losing streak, to take a position like this. Compared to a low quality trade, I'll find a win recently that I took, which would not be considered the best quality. But this is an example of a position that isn't an A+ trade according to my rules. Now, reason being for this, if I just do a quick analysis, you can clearly see we're sort of struggling to take out these lows consistently. So the most recent ones, we came here, didn't take out the low, came down again, didn't take out this low. Only reason I would have still taken this is obviously because the overall direction is bearish. Now, looking at this up close, we have a zone where it's not very clearly untapped, right? It is untapped, of course. This green candle hasn't reached the zone, and there's decent liquidity, but it's a very close call. And something like this is probably not a trade I would look to take during a losing streak. If you're on a losing streak, you need to be increasing your strike rate as much as possible. Now for me, it's a little bit of a middle ground because I don't really take any low quality trades. Most of them are all good. Any low quality ones I just avoid anyway. So it depends on your system and how it actually works. So have you done the backtesting and found the stats to actually be sure of this? What type of losing streak do you have when you take low quality trades, right? What's the maximum number of losses you can take in a row versus when it's only A+ trades? And you need to look for these type of things so you actually know what to do during a losing streak. It can't just be random. You need to remove randomness and human thoughts from a lot of your trading, as much of it as you can. If you don't have this already planned out, you haven't found these numbers, then you're just going to be in the markets. Should I take this? Yeah, I think I should take it. I think I like this one. I think I'm going to take this one. It's all this I think. You shouldn't have to do much thinking with your trading strategy. It should be discretionary. And that brings me perfectly onto the second point, which is having a drawdown risk management plan. So what you want to have in this is calculate pretty much what your max number of losses is based on past data, based on backtests, this type of thing. Once you know this, a general number would be, let's say 4 or 5 losses in a row. Once you take 4 or 5 losses, you reduce risk to 0.5%, just to reduce that potential downside if you take more losses. Now this is going to make it slower to build back up, but it's the way that you keep accounts. It's the way you keep funded accounts. If you stay risking 1%, there's a very high chance you might end up losing the account. 8% drawdown or 10%, 5%, whatever the rules are in your firm, is not unheard of. That is normal in the markets. They might not all come in a row, you might have a few wins in between, but reaching that number of drawdown over the span of a whole year is completely normal, and you want to keep your accounts, so you have to then lower risk after a certain amount of losses or after a certain amount of drawdown. You can decide what that number is for yourself. It might be once you're into 2% drawdown, you half risk, you risk a quarter. I don't know how much you decide to use. For me personally, I only risk 0.5% on funded accounts until I'm 2% in profit anyways. So if I was to go down into 2%, have a losing streak, then I would be reducing the risk even lower. Now, I'll only count as a losing streak after 4 or 5 losses, let's say. If I've just started a fresh account and I've only lost 2 trades, I'm not going to reduce risk, I'm going to stick with the 0.5%. These are things that are very important to consider. You need to know your numbers, you need to know your own strategy down to a T in order to actually be aware of this. So I myself know my own strategy incredibly well. If I don't have exact numbers for all of this, I have an understanding of what to do anyways. So make sure you put in the work into backtesting and you're being realistic there as well. You're not forcing wins or taking off losses just because you think, yeah, in the live markets I wouldn't have taken this. I'm sure you wouldn't have. Let's stop lying. Keep the losses on your backtesting charts and do it properly. So that brings me to the flip side of this, which is trade the same way if you only take high quality positions in your strategy. One lesson that I learned from the losing streak I've just been on, and I'll find the trade actually to show this, is from this trade right here. So this is a trade that I took recently on GBP CAD. It was a high quality trade, right? A standard trade in my plan, and I could close that break even, which is not a part of my plan. And I never normally do this. The lesson from this is that I was trading differently based on emotions and thoughts due to the fact I was in a losing streak. I decided to close a break even. I didn't want to make the streak any longer, even though I know a lot of the time, and especially when it's a push straight off like this, only green candles, price is obviously going to retrace back, often fill this gap before continuing upwards. That here includes my break even mark, and I decided to go to break even just because I was on a losing streak, even though I never normally do that. As you can see, this trade ended up hitting a 1 to 10. So everyone in the Discord will know this is not no backtesting data or anything. This is the live trades. I put out the signal for this exact TP before we took it on the entry. TP1 here, TP2 at 1 to 10. So it was about 7.5% around that number, including the TP1 and then TP2, and I took home nothing, 0%. This trade alone would have wiped my entire losing streak, along with the 1 to 3 on GJ that I hit as well recently, some other trades. So that just shows you have to be very psychologically aware of how you're feeling and different decisions you might be making just because you're on a losing streak. There's no actual technical reason for me to close here break even. I know it's a part of my strategy to not do that, but simply my reasoning at the time was I'm on a losing streak, so I'm going to close this trade at break even because I don't want to take any more losses. Well, of course I don't want to take any more losses, no one does. The markets don't know about my losing streak or losses. They just play out the same as normal. And if normally I shouldn't close a break even, then I shouldn't close a break even now, because the markets are the same, it's the same technicals. Whether I'm on a losing streak and my emotions are different, the markets don't care. So you have to trade the same way if you only take high quality trades. Moving away from the quality of trades aspect, you have to trade the same way in all your other decisions as well. So make sure you're not changing things due to your emotional state. And there's a lot of exercises you can do, obviously, to get your emotional state grounded and make sure it's consistent. Quickly add in, for those of you guys who aren't in the Discord and trade the strategy, yes, this was a 1 candle liquidity zone, so it needs a fake out, which in the live markets we saw a good fake out, and it has to be an obvious demand zone, and it has to be at a close distance to the zone, as well as clear movement back. Just a very quick summary, I won't go into detail. All technical knowledge you could possibly need on the strategy is in the Discord if you want to join that. This next point is going to be about funded accounts versus real accounts, because obviously they don't function the same way. Funded account trading and the rules they have, it's not reality, it's not real trading. If with standard risk, 8% drawdown does not allow you to trade realistically. All traders at some point over a 5-year period are probably going to go into 8% drawdown, if not more, if not multiple times, and then obviously trade out of it. So one thing to consider with this is that if you're on a live account, you might be, let's say, up 50% since you started the account, and you go on a losing streak, 5 losses in a row. If you're up 50% on the account, you're not going to care that much about a 5% losing streak. You don't really have to change your risk if you don't want to, and you can continue to trade normally. So the thing with this is that funded accounts obviously don't allow you to do that. A 5% losing streak is going to feel like a lot more on a funded account You're never going to be up 50% on a funded account if you trade properly, and they're also going to be resetting a lot. You might take a payout, your account resets to 0%, and then you go on a 5% losing streak. You're going to feel like you're down 5%, although realistically on the year you might be up 60%, but you're not going to feel like you're up 60% when you've just lost 5 trades and your account's reset. You're going to feel like a losing trader, you're going to feel like you're about to lose all your accounts, and it's not going to be the same at all. So you have to consider this emotionally, think about a plan of how you're going to deal with this. It won't be the same for everyone because we all have different psychology, but this is something very important that you have to consider. You're down 2%, although realistically you might have just taken 3 payouts in a row for 5%. You're actually up 15%, you've lost 2, you're actually up 13%, but here you are feeling stressed, minus 2% on an account. Funded accounts are not real trading. That's the point I want to specify with this. They are more difficult to trade. I know almost everyone these days is trading funded accounts, and so you really have to think about this realistically and remove those emotions. Make sure you're aware yourself that you're not down 2%, you're not a losing trader. It's just that your account's reset. You need to deal with this accordingly. So if that's decreasing your risk, I recommend always having a live account that doesn't reset, with a consistent balance, so you can see your actual results and where you're at with trading. Because if you don't have this and you're just constantly resetting accounts, you never know your actual stats, first of all. Secondly, your actual performance you can't really realistically see. If you open TradeZella or whatever for your live account, you might see a consistent equity curve and great profits. Whereas in your funded account, you could be in drawdown, very nervous, thinking about losing the account. So that's just what I want to highlight for this point. Alright, so emotionally, handling a losing streak, I have some very interesting insights recently based on the one I've just been through. And so most people, the first time they experience this or try and go through it, are simply not going to be able to handle it. They're just not built for trading. They will end up quitting, that's the reality of it, or changing strategy. Now, when they do this, it might work out well because the strategy they change to could be performing well currently, having good results in the market conditions. But the same thing's going to happen. 5 months might go by and then that strategy has a losing streak, or now they're just going to change again. It's like resetting all your progress. They're trying to avoid the reality of trading, and they might even be telling themselves that they're not, but they don't think a losing streak is normal. They can't handle a losing streak, so they keep going through these cycles. But in reality, it's probably just market conditions. There's losing streaks with every strategy, and you can't keep changing every time it happens, or you're just going to be back to the same place and you're never going to get through it. So the ones that do go through this will reap the rewards on the other side. It's as simple as that. Once you've been through it once, you've dealt with it emotionally, the next time it happens, you will know exactly what to do during it. You will have experienced it once, you'll know that it will pass eventually, and you'll trade properly. This is all congruent with being a full-time trader and living off trading. Those things I said at the start of the video. If you can't do that, it's going to be impossible for you to live off trading and be a real trader. You will just be in the same loop as all these traders that are unprofitable and will stay unprofitable on social media. I'm just saying it how it is. That's the reality of the situation. So you have to make sure that when this happens, you're in the emotional state to deal with it. Another point of this that you can't hide from is that you have to be in the financial state to deal with it. To become a profitable trader, this is why most profitable traders who are real online, they all say you should have another form of income or a form of savings, whether it's a job, it doesn't matter. But you need this because if you have 2 months of losses, you can't live off trading anymore if you're not making money from it. That is the reality of trading though. You don't make money every month. It's not a consistent or the same income all the time. And so you have to have things in place, such as savings, second incomes, to be able to handle this. If not, it will be very difficult for you to become a profitable trader. You can get lucky with this. If you have become profitable mentally, right, you have your psychological edge, your technical edge, and you start without any savings or income, trading during profitable times, then sure, you can build up income and savings from trading to then still be sustained during a losing streak. That can happen, but that's not reliant on you, that's just reliant on market conditions. So you don't want to be in that place in the first place. Secondly, trading as a whole is just going to be difficult if you don't have savings or other income, because every trade is going to mean a lot more to you emotionally. It's going to be a lot more important for you financially, and so it will be more difficult to handle trading psychology. With that out of the way, that's going to be it for today's video. Just wanted to drop that reality type of video, and It ties into what I've been experiencing recently, and I know a lot of you guys as well have been, who aren't in the Discord because you've messaged me on Instagram, spoken about the current market conditions. They have just been pretty trash, but thankfully they've been waking up recently. More volume we're seeing come back into the markets. Again, this can happen during summer months as well because they do tend to be a bit slower, but that's just something you have to deal with. So hopefully you guys enjoy this one and took some lessons from it. Make sure you learn from the experiences that I've just been through if you haven't yourself, because they will come around and you do need to have the knowledge to be able to handle it. So with that being said, I know I haven't been active for a long time. I'm going to get back to uploading. I've been here the whole time. Everyone that's in the Discord knows that. We've been trading every single day, very active. There's some new things in the Discord that I've not said on the channel before. So the daily forecast of the signals, webinars every single day, daily forecasts every single morning, put this out for the current day. In-depth market reviews every 2 weeks as well, completely technicals focused, going through all of that. And then you've just got all the other sections. So what to do during news. All my back tests are uploaded with the results, so you can see everything to do with those. So if you want to join up, the link will be in the description for that. But that'll be the end for today's video. I'll see you guys in the next one.